Why do banks exist? Why does insurance exist? Why do people invest? And why do financial services companies become some of the biggest businesses in the world? The answer to all these questions is not finance. The answer is human emotions. That is fear, security, greed, love, growth, and survival. Today, in this episode of I for Investment, we will understand how human psychology created the entire financial service industry. Whether we like it or not, almost every activity in modern life revolves around money. Earlier, people used barter systems, exchanging goods for goods. However, today money has become the universal medium through which we fulfill our needs, dreams, comforts, and even survival. From basic necessities to luxury lifestyle, money silently powers everything. That is why financial services are not optional business. They are deeply connected to human life itself. According to Tony Robbins, every human being is driven by six major needs. Need of certainty. We all want certainty and security in our life. That means we all want a stable income, a safe future, financial comfort, and because we seek certainty, we work, save, insure, and invest. However, here's where the things become interesting. Financial services are not built on mathematics first, they are built on human psychology. The second need in human psychology is uncertainty. Life is unpredictable. Illness happens, job losses happens, market crashes. And because uncertainty exists, that's why insurance companies also exist. Insurance companies provides you insurance against the uncertainty of life, health, and vehicle. By providing you the life insurance, health insurance, vehicle insurance services, all businesses, including life insurance, health insurance, and general insurance, are built around protecting humans from uncertainty. Imagine if the sole earning member of a family disappears tomorrow. What happens to the family? That single fear created the life insurance industry. Insurance is the business of fear. Financial services are deeply connected to one powerful emotion, which is fear. Fear of death, fear of illness, fear of losing money, fear of uncertainty. And insurance companies understand this thing clearly. Human will always pay to reduce fear. You fear losing health, you buy health insurance. You fear losing life, you buy life insurance. You fear accidents, you buy motor insurance. And here's the most important part, some insurance products are not even optional. If you own a vehicle, motor insurance is compulsory. This means certain financial businesses automatically keep generating recurring revenue. Having life insurance, health insurance, and general insurance is a part of managing risk, which is one side of the financial planning. The other side is wealth creation. Money sitting idle loses purchasing power because of inflation. That means your money must work while you work. And this is where investing enters. And when we talk about investments, we seek investment avenues and the asset classes where we can invest to grow our wealth, such as stocks, mutual funds, demat accounts, FDs, RDs, gold, alternative investments, real estate, etc. Today, millions of people invest digitally, and every transaction generates income for financial service companies. Now think carefully, if people always need banking, insurance, and investments, don't you think that financial service companies will always be important? So many private sector banks are listed in Indian stock markets. Which one to choose for investment? So many public sector banks are listed in Indian stock markets. Which one to choose for investments? So many small finances and payments bank are listed in Indian stock markets. Which one you should choose? And this also goes for insurance companies, for NBFCs and finance companies, and also for the brokerage AMCs and financial platforms. As we could figure out a lot of companies by analyzing our lifestyle and our daily routine, so the question arises in which company we should invest by purchasing the stocks, because it can happen that one company is performing positively and another company might perform negatively due to numerous reasons. Therefore, in order to eliminate that confusion, we as an investor can buy the entire index or the index funds. Similarly, as we bought the basket of the fruits to get all type of nutritions, index fund is like a basket of all the good stocks which is traded on the stock exchange similar to the individual stocks. Hope this video was useful to you and you have learned something today. If yes, then